And once again, welcome. This is Friday, September 3rd. And get these disclaimers out of the way. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should be careful to consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room, and it is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during the live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose. And before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. And now that we got that out of the way, let's go over to the charts. And we had an alert at 6:45 this morning. Let's see, new share. Here we go. Let's get the screens up. And this one's been kind of interesting. We had a alert at 6:45, and pretty much right within about 5 minutes, it broke the wedge that I drew. But so now it's a matter of seeing if we can maneuver this at all into to continue, learning to try to use a continuation on these types of trades. So if I come over to, let me just draw this on, put this up on a 15-minute chart, and we'll see, and I'll show you how I drew this. If it's not, that's pretty hard to read with it like this, but it's just going to have to work with it. All right, let me take this moving averages off. And so we had a pivot high, we had a low, and then we had another high. Now the problem was it was so steep that it was really hard to draw a wedge. So I had to try and find some place where I could try and get that third hit on my trend line between my A and C line, as well as with the B and D. I never did find it yet. I'm still waiting on it over here someplace. But I was able to, when I got down to the 1 minute chart, I was able to find that. Let me turn some of these lines off here. I was able to find that trend where where I was able to tuck my A over here. Here's my hit. Here's the trend line hit, and there was the third hit before the alert. We had the break, came back up, retested the line, and then it went down for our 7 pips. And so right now, what it's doing is trading inside a secondary wedge, which is now in yellow. The primary wedge was orange. And so the primary trend line is still this orange line. You can see that we had a nice move down, came back up, retested the zone, came back down, retested this area, never could quite enter close below here, came back up. So right now it's just trading inside this range right here. And right now I'm looking to see if it's going to get enough strength to break to the upside and then maybe give us another chance to retest this area up here. One thing we have to keep in mind is we have our 62 moving averages. If I put my 1 minute chart up, this is my 1 minute chart. If I put my moving averages up, you can see where it came up, tagged the 62, pulled back, came back, closed above the 62, pulled back. But right now, this area right here is, as long as it can keep on closing inside this area, it's liable to keep going short. But once this area gets breached and closed into this green area, then I'm looking for this thing to go long and break the wedge and start going up to the other side of the trend. But it's going to have to get through this 62 first. It's going to have to get through the 15-minute 62. All before that's going to happen. So once this breaks, if we get it closed inside this green band, I can move this over a little bit. And where I have this green band drawn is I have it at the top of where this red candle is over here, and I have it tucked in with where the A is. So right now, if it comes up and closes inside that area, I think it's going to probably be going higher. But it's going to have to get through this region right here first. And that's where we are right now. Trying to see if we can, if it's going to, we're trying to catch a reversal on this right now. Now it may just keep on going down. Here is the ultimate target right down in here. But how to get through this, it couldn't get through it. And you see it just keeps on drawing. Now we've got from the A to the B, there's a high, here's a low. Here's a lower high, here's a higher low. And if you look at this, if I can move my C over here now, you still see that the C is still a lower high than the A. So it hasn't really broken through that yet. And right now we're looking at a higher low over here, potentially from this D area. And so right now we're looking to see if this thing's going to start. We have a nice strong move up, a pullback, and now we're looking to see if it's going to break into this green area that I have right here. And that's where we are with this.
Good morning, guys.
Good morning, Matt. And so that's where we are with this play. And so right now we're looking to see if this was nothing more than the break of the trend to get I'm looking at, there's a lot of buyers in here and they're trying to get their positions. And once they get done buying in here, they're going to drive the price up to the other side of the wedge. And that's where we want to be. We want to be trying to get into the trade somewhere down here if it does break. And that's why we're looking to see, but I want to see a close inside above this red candle. Because you can see that there are some sellers in here. Now the question is, are the sellers going to go away or the buyers all done buying and drive the price back up again? And we're just going to have to wait and see. But right now it's still making right now this trend line here is still in play and now it's still retesting. But we did have a break of this area right here. So it is starting to go, this is a momentum move. Here's a retracement move. And we'll just see if this thing's going to break to the upside and start giving us a nice move to the other side of that wedge. And that's where we are right now with this one. Are there any questions from anybody?
Actually, Al, could you just maybe show the big picture right now? I know we have a couple of people in the room that are totally new to Forex and might be kind of confused at the moment.
Okay, the big picture of how we do the wedge?
Yeah, maybe not on this. I don't want you to take all your drawings off.
Yeah, I'll move another chart over. I have another chart here that I can show you. Hang on a second, let me get this up. Okay, so here's where we are right now. This is another chart. Basically, it's the same chart, same thing. This is the area right now where this red area is. This is where the Euro US has been playing for quite a while. It did break up to this is where the new high was up here, but now it's coming down into the secondary zone that we had. So this is looking at more of the long-term type of effect on this thing. Okay, so I'm going to redraw this thing. We had the alert at 6:45, which was right here, and it was an ascending wedge. So ideally what I'm looking for a trend line where I can have a high, or excuse me, a low. Here's a high, here's a low, and you can see like right now, this is what I consider where the wedge is being developed in this area, because you had a nice strong move down, came back up, made a partial high, had a lower high, and it caught, and then they gave us our wedge alert. Now, just because it has the alert doesn't totally mean what we're going to be doing with it. So I'm looking for a trend where I can get an anchor, a hit, and another hit to validate the trend line. If I come all the way over here, I think I may be able to do that. If you see, like from here to say like this area right here to here. So I can, if I draw this straight line right here, that validates this line as a strong trend to the downside. But now we have the wedge alert. So right now we have a low This is a validation of the trend. So I have a low, so I'm going to use this for the high. I'm going to use this for the next one, but I don't have validation over here to the low part. But I'm going to see if I can't figure out a way to make that happen.
So I'm
So
just gonna, can I jump in for a sec?
Sure.
All right. So I already jumped in Euro USD for long.
Okay.
So I decided to jump in a little bit early. I like the candle formations. And my target is actually pretty big on this one.
Is it the top of the wedge, or is it going to be higher?
It's higher.
Higher. Okay.
Yeah. Not any financial advice or nothing, but I'm actually looking for it to go to at least 1.1840 at
Which
least
is right about
before it turns
this area
around.
right here.
Yeah.
Okay. Okay.
So,
well, let's tell you what. Let's mark that and see if how close you're going to be here. 40,
yeah.
your target area. Let's just go and mark that right there. And so anyway, here's where we're looking at for the initial, here's where I was looking at for the initial wedge. So now if I put this onto a 5-minute, we started with the 15-minute chart. That's where the alert comes in. And so I go to a 5-minute chart. Now I want to see is that I'm still looking to see where to put this. I'm going to put the C right here because that's as close as I can get before we had the alert. And actually, I'll accept the close of the alert candle. This is a candle that closed at 4:45. So now I'm still looking to see over here, where can I put this A? I'm going to use this. I'm going to note this low part here because that's a significant low from the higher time frame. But I'm looking to see where I can get this, where I can try and find that third hit, and still have this thing be ascending. Ascending means that the trend is going up. So if I'm using this for my hit, then I'm going to come over here and see what well, let's just say what break of a red candle can I use to be able to find some other hit in between. And really, there's not much of anything. Best I can do is pretty much do a flat line across. So this is pretty much how I had to draw the, I should bring it down one more because it's still kind of, I'll use this low right here. So it's ascending right like that. And that's how I drew the initial wedge. Now, the part that I'm also looking at is if it breaks the wedge, where do I want to get in? And so what I'm looking at is I'm going to take this to a 1-minute chart, and I'm going to tweak this as close as I can. And so here's where the break was. And so I'm looking at this zone right here from the A, from where I drew, this is still ascending. I still don't have my third hit. But sometimes you just can't quite get it. Let me see if I can, I think I did have a little slight, this was, yeah, so this is where I'm using, even though it looks like it's flat, it's still very slightly, it's pretty much a flat line across for pretty much, but it's still, that's where I drew it, I believe. And so now I'm looking at, actually I had to bring it down a little bit more. I think I brought it down a little bit more here. Let's just take it, I think I took it at the bottom of this candle. There we go. I think that's where I took it. So then what I'm looking at is I'm looking to see where I'm going to get a close somewhere, break the trend and get it close to where it's going to be strong enough to where I think it's going to come down even lower. So I did is I drew another, before what we were doing a couple of weeks ago, I was just drawing a parallel line to this trend line. I sort of changed that method a little bit. Now what I'm doing is I'm drawing a box. I'm taking the low of the A to the low of the C, and I'm saying that if I get a close inside this box, breaks the trend, you still see it'll still, let's see, where does this thing come from? Let's see, where did that second line come from? So here's actually here you see this is the low of the candle. Actually, this is what happened here because this happened really quickly. I'm using this area here. Here's my hit. So here's my third hit. So I've got this anchor, the hit, and actually I can bring this up a little bit higher now. There we go. Here's the anchor. Here's the hit. Here's the wedge alert. Here's the low before the alert. And now this is the area that I'm looking at to be taking it short. But what I want to do is I want to see it close. I want to get I'm looking to see where the lowest blue candle is, which is right here. And I want to see it close below this blue candle. I want to get it closed below the blue candle before I enter it short. And so I got the close was right on this. It came down into the zone, was rejected. No close right here. I came over, it went up, retested the wedge, came back, and this candle right here just barely closed, which helps to validate the trade. So the entry on this was actually right here because I had to close inside the box. And then here's the move down. Now, so there was my trade. So from this point, so my entry was here, came down. I got my 7 pips. That's 11 pip move right now. Came back up, it retested this area. Still, the wedge was still valid. Retested the area, and you can see this makes like a little bit of a. I guess it was kind of like a W. Came back in, retested, and then we took another. It came up, retested the 62 moving average on this 1 minute chart. Was rejected the wedge. Came back down, gave us another hit, and so this was a secondary entry you're able to take on this. And now what's happened is now we've got the close above where that blue zone was, where that green zone was. And that's the synopsis, and that's where we are right now. So we had, this was still the main entry zone. Let's see if I can get the right one here. Let's see, take that out. And so this was the main entry of, I wanted to see it close. I'm in the wrong line here. It's my other chart. I think that's why I'm not seeing what I'm wanting to see. Let me move this back out of the way. And so now what we're looking at is that this was the entry. This was where we had the first entry. We broke, closed, came down, and now we're looking to see what it's going to do in this part. So right now, this A, where the A is, now it's made a higher high. And it's made a higher low. And it's starting to develop another secondary trend. And we can use this as an anchor. Here's a near hit, so here's an anchor. Here's a near hit we're looking at from this point. That's 1807 to 1806. This is only 1 pip away from where this trend line is. This validates this trend line. We don't have the secondary hit, so we're still waiting for this AC line to be revalidated. But if this thing gets broken, well, actually it did get validated because we had it over here. Anchor, a near hit, here's a hit. Now this one got broken, and so now we're looking at this thing's trending more on an upward trend now. So it's just changed directions. It's coming back into the wedge, and right now we're looking to take this thing on up to where the 62, I would expect to see, it broke the 62 on the 15-minute, on the 5-minute chart right here. Maybe expand that out a little bit. Let me just take some of this stuff off and you can see where it's looking at right now. I'm just going to take, I'll leave the main wedge on. We have our moving averages are starting to consolidate right here. We have cross of the green over the 13. We had a hit of the 62 on the 5-minute chart. Let's see if we can expand that out a little bit. We haven't quite, and we're just now getting the close where where I would say close above this red arrow over here, and where it broke that other trend line that we had. So right now, as this thing comes up and closes, we're into a new trend, and we're looking for it to come back up to retest this area up in here. And our 15 minute 62, if I put this on a 15-minute chart, it's right here. So this is going to be the next target. Right now, the moving averages on the 15-minute chart are all in the correct direction to go short, but I'm looking for it to come up and retest this area right in here. And we've got this nice big move, this big red candle coming down. No blue candles inside here, so this is where the target is, and I'm looking at a bounce right off of this 62. And that's where we are right now as we speak. So this is a higher time frame. So this is where, and you can see right at this, the top, the green, or the top of this red candle here is right where the 62 is. And we're looking to, and all the wicks have been, once this red wick can get closed above, it's going to probably head right on up here. There's nothing else to stop it really right now. All our moving averages are moving up. Our euro has now gotten stronger than the US on the 15-minute chart. And we're just going to see if we can get some profit out of this thing. So this is going to be where my target's going to be initially. And let's get back to a 5-minute chart, which is where we were. We knew we're now getting the close above the 62 on here. We're getting the crossover. Now eventually I like to see this yellow one cross the 62. And then now you know where things are starting to consolidate and start moving in the other direction. But this was where all the buyers came in, they drove the price down. All the buyers came in right in this area, and now we're going to be looking for them to drive it up to where the sellers are, which is going to be up in this area. And so I'd be looking at this area right in here to see where the seller ultimately. My phone just answered me something I didn't even ask it before. Let's see, and this is going to be we're going to use this as our red supply zone right there. But I do expect to see a bounce off of this area, off of this one right here. But right now we're looking at this thing could be, so right now the range that we're actually trading in right now, and this is kind of a neat way of looking at it, is let me just see if I can get a fresh, let's see, I think I saw my 1 minute. I'm on the 5-minute. Yeah, let me get to the 1 minute chart here. I'm going to unsync all this. Well, I'm going to unsync this. I'll go back to my 5-minute chart. And if you look at this range right here, and if you draw it's the straight Fibonacci tool. Let me take this off. And you do a straight, remember I said that when you have a pivot high and pivot low, the prices, the movement is actually going sideways, but inside, the higher the time frame you have, or the lower the time frame you have, the more you can see these trends. But really, the price is actually staying within this zone here. And so in that case, you were looking at it from a straight Fibonacci standpoint. If you have your high up here, and you have your low down here, here's the low. Here's our high. And if you look and see where our zone is with this, right now, this is the upper 25%. Let me just move it down here. This is actually the upper 25% right to here. And this is the lower 25% right in here. And you can see where the price is ranging inside of this. So if you can get into a trade down in this area or get out of it, you're trying to get the meat of it right in here. You're not trying to pick the high, you're not trying to pick the low. You're just trying to hit it for a target. Now, once it gets up to this area, that's a pretty good target range, where it's going to be over the upper 25% of this range. And and if you got in down here, that's a nice little trade right up here till it comes up and tags that 62. That's a 25 pip move. If you can get, and you're just trying to get the meat of the move. But this is the playground it's playing in right now with the top 25% and the bottom 25% of this range. Actually, it's down here like that. That all makes sense. And so with these wedges, basically you have two choices with the wedges. You can, if you have the range in between the top of the top trend line and the bottom trend line, you can play that inside the wedge. Then once it breaks the wedge, then you can follow the trend to get that breakout. And the longer it stays in this range, usually the higher the move is going to be to the upside or to the downside. But right now it's building a base all through here, and you're just trying to get those little 7 pip moves out of that in the process. Let's go back to our 1 minute chart. And we can see where was at 62. Here's our 1562 is right up in here. This is the area where we're looking at. And all we're doing is we're scaling, we're getting a microscopic picture of what the bigger picture is. The bigger picture is it's ranging between this wedge and where was it? Well, you can see where it's, this is 62. Here's the top of the wedge here. Here's the bottom of the wedge. And you see it's just getting tighter and tighter as it works its way out. But right now it's still ranging in between this red zone and this green zone. When it gets up to this 1562, that stands for the 15-minute chart, the 62 moving average is what that stands for. And if we can just get this little bit of, and once it gets up in here, right now I'm already at 9 pips worth of profit. As soon as it gets up and tags that, I will probably just get out and say, thank you very much. Here's my trade for the day. In fact, I'm going to take one position off right now.
Still got a bit before.
Yeah, but I do think we're going to get a bounce off of this.
Mm-hmm. I believe so. So the reason I took the trade where I did.
And where did you get in, Matt?
I got in at. Let me go see the trade station. I have an idea. Let's see. What do we have? Oh, that's much later than I thought I did. 118.14.
118.40, which is right in this area, right in here. That was right in this area, right here.
Yeah, yeah, right before it started dropping.
That was just before the. Did you catch it after it came back from the bottom of the wedge, or did you?
No, I took a little bit of heat for 3 pips.
Okay.
So I got in on that smaller candle, that smaller blue candle that bounced off to 62. Just a little bit earlier, right there.
Okay.
Down. You know, there's 2 small candles, and then it goes down deep and hits your.
This one, like around this.
That one there, yeah, right there.
This one here, yeah.
Yeah, so I got in on the blue candle before that, and then so I had a bounce on a pitchfork. What I did from price action standpoint was that this was actually a pretty significant higher low, and it appears to be, it could be a wave 2 from an Elliott wave perspective, or whatever you would want to look like, so I like that from that point. And on the other side, I drew some extra trend lines. So, and my stop is really tight on this, okay? I didn't use a really big stop loss. I'm literally like 5 pips under the bottom of the trend line, under the bottom there. Let me send this.
Do you want to share your screen?
Yeah, just for a sec.
Yeah, let's have you share your screen here. That's that way the big so it may be a little clearer for
Yeah, some
sharing.
people.
And
now I don't want to. Just a word of caution. I don't want to over complicate things. So if I go a little too fast or things are not super clear, I will slow down. So here is a pitchfork. So the pitchfork is basically trend lines on steroids. I put this pitchfork on very far away. This pitchfork was drawn. I can't even go back on the 5-minute chart. I'll have to go back on the 30-minute just to show you how valid it is. So anyway, this was where I drew the pitchfork originally. I liked it where it was, and now I just put lines extending out from that pitchfork. Now this is on the 30-minute chart. You see how on a higher level, this is still a higher low than over here. So it looks pretty good from that perspective. It actually looks like a momentum shift, like it actually turned around. This looks to be like a consolidation and not a continuation. It just looks like a reversal from my perspective. Now, if we go down to a lower time frame where I'm more comfortable actually, from a macro level, I'm not great at following price very much. I just use pitchforks. But here, you got a couple options. You see how it tags this trend line really nicely? Here it breached a little bit, which tells me that I don't trust this bounce. So I have a bounce here and a bounce here and a bounce here. So this makes this a valid trend line. It hasn't been breached. It's not. And I do believe, Al, that this is exactly where you had your bottom trend line as well.
It is. It's, that 1814 area was about the number.
Yeah, that's basically where it's got to go. There's no other spot. You can either do it this way with the flat top, or you can draw one going down like this, and you have a pretty good test here. But I'm not taking this for a sell because I have this breach here. So I don't trust this from a short perspective.
Let me just say one thing. What we're trying to do in this room is we're trying to teach you how to read the charts. We're trying to give you different methods and ideas on where you can expect price to go and where you can expect price to be rejected. And there's a lot of different methods of doing that. I've got my method, Matt's got some of his methods, and there's a lot of other tools out there. Now, one thing we're being real careful about is not to complicate things especially for the new folks. We're trying to keep things as simple as possible, but when we get an opportunity to, as a teaching moment, to see how to stay into a trade or how to get, or even how to get into the trade based on what the wedge alert was, that's why we're doing what we're doing with this. And so we're cautioning everybody that even though it may sound a little bit confusing, and there's a whole method of technical analysis that the more you know and the more you're exposed to, the better trader you're going to end up being.
And you will get more comfortable with it over time. You're gonna see, and this is why trend lines are so powerful, guys. Look, you got a trend line here. This is a bottom. This bottom was breached, it tagged, it took off. Here, you see why I didn't trust that candle when it broke? I'm not taking a sell here, guys, because price structure, this is a W, okay? So if I drew, just so you could see, make it real clear, There is a
It did break
W
out of
here.
the top. It did break out of the top of the wedge, by the way.
Yep. So here's your W. M's and W's are the best trades you can find in the Forex. All day, every day. You're going to get some resistance here.
And those wedges are basically, the M's and W's are lying inside the wedges.
Yes, always. Because you have your wedge. An M and a W makes a wedge. So here, you got a W, okay? Here, guess what else you have? You basically got another wedge. So anytime you see this structure, you can almost always try and put a wedge on it, and then you can take the break. This break here is about 20 pips. Doesn't matter if you take it all. This is on a 15-minute chart. So here, scale from here to here is 10 pips. What are we aiming for? We're aiming for 5 to 7 pips, or this small little portion. Here, bingo. Guess what my target was, guys? What did I say my target was? 1840?
1840.
Right. So I just hit my target. It's game over. Trade is closed. Up.
How many pips did you get out of that one?
So we got from 1814.
1440, about 34 pips.
34 pips.
Holy cow. Good job, Matt.
And I don't, it's not boisterous or anything. It's just, there are ways. You see, all this stuff on my chart makes it look like a bunch of scribblings and stuff, but there is method to this madness, and it's trying to convey it in a way that is understandable. This bounce on this pitchfork line, this is your money maker. But I've drawn thousands of pitchforks. Now I want to start showing at a later time how to draw pitchforks, because there's so much value in them. And they can really be a game changer.
Thanks, Matt.
I can't delete all that. But anyway, there's going to be more to come about that. And I kind of want to run something later on and how to we're not deviating from what we're doing. We're just adding another layer of maybe a little bit more complexity, but just something more advanced. We'll be adding these extra lines.
And the thing is, if the reason why, I'm assuming the reason why everybody's here is because you want to learn to be a trader. You want to learn how to trade. And the technical analysis is one facet of it. The money management is another facet of it. But probably the hardest point to be able to master and to get control of is that BTE indicator between your ears. That between the ears
by
indicator
far.
The emotions is the hardest part of trading, bar none. And we're trying to just give you the tools to give you the confidence that when you see that as you look at these charts, as you join us in the mornings, and we're going to start pointing out these different levels, your mind will start seeing what we're seeing. And then you're going to be able to pick those things out. And then you're going to say, okay, and I'm just trying to find different ways of explaining how to enter the trade. And for myself, because I'm still constantly learning myself. I didn't really start trading wedges until about a couple months ago. Yeah. But I've been trading for years. So what I'm doing is I'm applying all those different technical tidbits that I've gained over the years and try to apply them to the wedges, and it's starting to really work very nicely. And as I find new methods of presenting it, because everybody learns differently, so I'm trying to find different ways of presenting the same information, only in different ways, so that not to confuse anybody, but maybe to make it more clear for other people that learn in different fashions. And the pitchforks will be one facet of it. We haven't delved into that too much yet, but it's coming. And Matt has a great level of experience with a lot of different types of analysis with pitchforks, harmonic waves. He's got some things to teach me on some of that. But right now we're trying to keep it simple. We're trying to get it knowledgeable so that as you spend the time in these rooms, you're going to start seeing these things that we're seeing. And the pitchforks may work for you, just basic wedges may work. But everything starts with a wedge. Everything starts with a trend line. And if you look at the pitchforks, they're nothing more than trend lines or channels of a trend.
Yeah.
And you're going to see different. It's sort of like those Fibonacci numbers on a slope. Is that, and then you find out where those prices intertwine, where those energy points are, to where you have two different lines from two different sources that end up the same spot, and you'll usually find a bounce. And so that's kind of what we're doing here a little bit this morning. We're just going to give you a little bit of exposure to that, not to overwhelm anybody, but that's kind of what we're trying to do.
Yeah.
Guys, that was actually simplified very well. But I do have a question for you. Now, for somebody who's a total beginner, is there any recommended reading? Should they learn about trend lines, or what do you suggest they would be the place for them to begin?
The first place that I would say for everybody, and I'll say this book has done more for me than probably a lot of the other seminars and webinars that I've been to over the years. And the book's called The Slight Edge by Jeff Olson.
Mm-hmm.
And that book, because that helps to confirm why we are in the Hawkeye system, why we're going for 5 pips or 7 pips over and over again. It's just those small little gains that turn into huge gains doing the same thing over and over again. Like I said, if you start with a 2%, if you go for a 2% target every day, and you can make that 2% every day, it doesn't take too many weeks and months before that $500 account is now thousands of dollars account. And then those become even greater. The old saying, in case you haven't heard this scenario, is that there was a rich father that left his 2 sons some money. And they had a choice. They could take $1 million all at once, or they could take a penny that doubles every day for 30 days. And the moral of the story is that the penny will over 30 days, that penny will make over $1 million if it doubles every day. It only starts with a penny. The other thing is, the part of that same equation is the son that took the $1 million all at once. By the time the son that got the penny doubled, he already lost his money, because he had all that money that he had at his disposal, and he made investments that didn't work. He did this, he that, and next you know, he had all that. But rather than getting that system that compounds every day, 2%, and we're looking at 2% a day, 5 pips, 2% a day will make you a millionaire in 2 years if you start with a $5,000 account. I suggest you start with a $200 account and keep making that 2% and just add those lot sizes to it. Just add the lot sizes, and eventually you'll be trading. You'll be making $1,000 a week, $5,000 a week, $10,000 a week. But you start with the penny. But you have to start with the penny.
Yeah, absolutely. And you need to understand how to grow the small numbers, because once you get up to a $10,000 trading account and you're risking 2% of your trading account in 7 to 10 pips, guys, it swings fast. Your emotions are going to screw you up really big time. And then you might decide that you want to extend your stop a little bit. That is increasing your risk significantly in the trade. And that's why we try to keep a very tight stop loss. This was an awesome entry. This bounce here, that was an awesome entry. And I'm just messing around with a pitchfork, okay? I put it on this swing. I went from a swing high to a swing low. I tried to get as many hits as possible on this trend line, this pitchfork, to kind of validate it, to know that I have it tuned in the right direction. This I like, because you have rejection here and you have some really clean bounces. Now, if I extend these lines a little bit more, you're going to see it's going to continue to intersect. All these trend lines are with some additional confirmations, are more potential trades.
Now, one thing I would say for all the new folks out there, even the people that are experienced, don't try to understand all that Matt's saying right now. Just sit back and absorb the fact that these things exist. And then you start honing in on learning how to, and that's what one of our jobs here in this room is to try and show you, one, that they even exist, that there is valid ways of drawing these charts and reading the charts, but don't get overwhelmed and say, well, this looks too overwhelming, because as you're here longer and you spend time with us, it will all start making sense. Just
It
absorb the
abs-
fact right now, absorb the fact these things exist, they work, they are methods, and this is what a lot of, but they're basically all based on trend lines. And that's why, but we're starting with the wedge. The wedge is the main trend line. We have a nice move down, you have a retracement, and you have a higher high, higher low, or lower high, higher low, and then eventually you get the break and you follow another trend. And that's all that's really happening with these pitchforks. Uh,
yeah.
and and so, having said that, is there any more alerts?
Yeah, we're just waiting for another alert as we
Right now, we're just waiting
are.
for, waiting for another alert.
You
But
just let me know.
yeah, but that euro yen looks like was a nice trade. It's pretty much, I mean, it could still keep on going. Let's go back. Let's go back to that. Let's go back to the
Okay,
euro
yeah,
yen
let's do
chart,
that.
and we'll see if we can. And the next,
Boom.
the first thing is we're looking at get our 7 pips. Learn how to get to 7 pips. The next order of operation is to say, okay, we got our 7 pips. We're doing that consistently, which is a great thing. But let's
And
see if we can maybe.
consistency is what you're looking for, guys. You're not looking for wins. You're looking for consistency. If you can do the same thing over and over again,
And that's
then you're going to be able to have success in the forex. It's whatever you can duplicate that matters. This is network marketing lingo, but they say it doesn't matter what works, it matters what duplicates, because what you duplicate can then be done over and over again, and that's where true success will be found. Now, for pitchforks, for learning additional stuff about pitchforks, I don't want to send anyone anywhere, because there's a lot of stuff out there, and the way that I'm drawing my pitchforks is very specific. You're not going to find this in the books. You're not going to find it in a technical analysis standpoint, because there's a little bit of play with it, right? Now, if I wanted to do an official pitchfork, like a traditional pitchfork, this is what you're going to find in the technical analysis charts and stuff. They're going to say, you need to put it here. You need to put swing low, swing high, swing low. That's your pitchfork. This is not good enough for me, because you have breaches and you've got, see this? This is not acceptable for me. I need it to bounce a little bit. So I'm giving myself a little bit of leeway. It was one of my mentors who has done significant research on pitchforks. That said, you can kind of give it a little leeway. Give it some wiggle room. Now you have a bounce. You have, it breaks it bounces, and it comes down. Like, this is pretty solid. You see how it comes down, it tags it comes back up, breaks it, and then it takes off? Well, this may look a little bit advanced, but all this is doing is adding another layer to your pitchforks. To your wedges. Right? Now you know that if for any reason it comes up and it tags this line and it rejects, this is actually potentially considered an energy point where these two lines intersect with each other. And we're going to call it energy points, because it's kind of what you're looking for. That's a little bit off. That doesn't count. This is that's what, 5 pips off? What's this? Yeah, it's 5 pips away. It's not acceptable. So that's not really an energy point. But this one would be, that's like 2 pips away. So that's okay. And then boom, it takes off. Now, this is something that we didn't do a whole lot of in the training. But when you do your wedges, we can add a whole new level to wedges, okay? You can actually take the high to the low of your wedge and take this stick, and you can put the stick here. And 70-some% of the time, it's going to go the full length of the stick. Sometimes it's not going to go the full length once it finally breaks, but it doesn't really matter. Because if you're winning 77% of the time, then it goes the length of the stick. The stick is going to actually be pretty significant. While we're waiting around, let's go to a lower time frame. And let's see. Did I draw the wedge according to the alert, Al, or is this outside? What was the alert time?
It was 6:45.
Yeah, I just woke up at that time and I went for breakfast. So you could do it this way with a flat top. Did you draw it as a flat top, Al?
No, I drew it as a descending it had more of a flat bottom than a flat top.
Oh, okay. So you would have done something more.
Because I was looking again. When I draw my trend lines, I want to see 3 points. I would see an anchor, a hit in the middle, and then a validation at the third part of the trend line. That validates the trend line. Then once that trend line gets broken, that signifies to me that it's starting a new trend it's starting a new trend in a different direction.
Okay, great. So your wedge would look something like this. And you see 1, that's 2, that would be 3, and 4. So this would have been your 4th hit on your trend line?
Yeah, usually if for me, if I have like a candle where it's like that first part, I would have only counted that as the first hit. That would be the anchor.
Right.
And then you have now you have the one before. You always see right where the wedge alert was. That's where the next hit was, right there, that red candle.
Oh, here. I'm sorry. Yeah. So
if you take that to a 1 minute chart, you'll see that it does the. I mean, I will allow the close of the 15-minute candle on the alert line. I will validate it. I allow myself to move it if it will help to validate that third hit.
I know what you mean. So here.
Because to me, the trend line isn't valid until I get that third hit.
Agreed.
That validates the trend on both the upper one and the bottom one. Now, and so once you get that third hit, now I'm looking for that bounce or that break. But also keep in mind that one of the problems we had, for some of you who have been with us for a couple of weeks now, is that we were getting the break of the trend line and say, okay, we're going to take the trade. We get a lot of times we got our 5 pips, but we barely got the 5 pips, and reverse this. Just kind of like what happened today is it broke the bottom. It got us a nice little trade on the breakout of the bottom, but then it didn't take very long for it to reverse.
No.
And so I've never been a real fan of breakout trades for that very reason, because usually by the time they break out, all you're doing is breaking out into all the institutional sellers, or in this to the top, the institutions are selling at the top and they're buying at the bottom. And where the breakout is where we're taking our small little bits of profit on those breakouts. They're just loading up positions to take in the opposite direction, which is exactly what happened today on the breakout on the bottom. You were getting little M's and W's after that break of the wedge. They were just loading up on positions to drive it up higher to the upper part of the wedge. And now they're looking at doing the same thing on the other end, where they're taking their profits. They're selling to the people that are trying to buy on that breakout, and then they're just going to drive it back down to the other side of the wedge.
Yeah.
Or in some cases, it's the channel.
We'll see what happens here. You see how there's 1, 2, 3, and then it became support. This down here, I didn't go far enough, but the only thing I can really say, if you want to advance your wedges, is learn everything you need to learn about trend lines. Like that would be really my direction, would be to figure trend lines out, because I can draw trend lines all day and you can see how they interact with price. Once it breaks out of the trend line, you see, like it's not coming back. And like Al and myself at this point, we can draw wedges all over the place, right? We're just looking for breakouts. Little breakout at the bottom, little place. So if someone's newer to this, what I challenge you to do is to go out and draw. Go into AIRIS or AIRIS and go back and draw the wedge alerts. You've got some time to play. Go draw 100, 150. Send it back to us via our email, and we'll critique it, because it's hard to learn when you don't have anyone telling you what not to do, or maybe there's a mistake somewhere. I'm not going to be 100%. I'm going to make mistakes. This trade could have not worked out. I would have been completely fine with that. My stop loss was just down here. So if you understand, if you're hesitant about taking a trade, it really only means one thing. It means that you don't know the ratio of winning that your system is geared for. We know that we're going to win about 65% of our trades.
Yeah, and actually, I think we're doing a little bit better these days here lately. But let's switch gears here a little bit. Let me just
go ahead. Yeah, let me turn this off. I talked quite a bit. You guys can.
Let's see.
I just stopped sharing, so.
Oh, okay, so that's.
I just wanted we just wanted to like expose you to that there is a whole bunch more to this. It's not just wedges. You can add stuff to wedges. We're not even talking about Fibonacci. We're not even talking about Elliott wave theory. We're not talking about, what we're doing is we're trying to simplify it and yet bring as much value as possible without overcomplicating things. And if you've ever taught, you realize that that's where the biggest challenge is. Because me, I could draw lines all over the place, but I'll lose a lot of people, unfortunately.
Now, here's what we have here. Like right now, when we had the original alert, let's just back this up a little bit here. I'm on a 5-minute charge.
Go ahead.
It's a little bit more expandable. But we had a strong move down. So that's your pivot high, that's your pivot low. And then you can see where we got the alert, and now we have somewhere along close to where the alert was, there was another high, a lower high, and somewhere close to the alert, there was a higher low, which was this case right here. But if you draw this from this A to the B area, and you just do a straight Fibonacci graph on there, we have the 76.4 and you have the 61.8. And just so you know, the 61.8, we don't use the 62 exponential moving average for nothing. 62 is awfully close to 61.8. And that's a lot where that number comes from. Then we have the 50% retracement. And that oftentimes, if you see a big move, it'll retrace 50% or retrace up to 61.8. But what we did was what I've just for a range, just for an area of range, because you don't want to be taking trades a lot here in the middle, because your stop is got to be up here, it's got to be down there, and if you take these trades in the middle, you're really gambling on trying to figure out which ways they're going to go, and so you want to try and get it. Now, if you're here in the middle, and every the indications say that it's going to be breaking up towards the upside, well then take it, but know where your targets are to make it so it's worth even taking the trade. Because if you get in here and you only have 3 pips to get to an energy point, in this case it would be the top of this trend line, anchor, hit, there's a third hit, that validates the line. If you're taking trade here, and now if you have your moving averages all in the right direction, and you have all your momentum going in the right direction, go ahead and take it. But if it's not, but everything is not lined up here in the middle, don't take the trade. Wait for it to come up here and then see, maybe I can, because up here, this is the top 25% of this whole move. And like I say, you're just trying to find, you see it broke out the wedge, but it's up here because we have this A right up here. Look where this thing came up, came right up in there and then close. It bounced because there's a whole bunch of, there's some sellers up in here. Now it'll be like that until all these sell orders are used up. Once all the sell orders are used up, then it will break out through the top of this area, and then who knows where it's going to go. So find your range, find your wedge, find out where your energy points are going to be. In this case, right here is going to be an energy. This is the top 25%. Here's the bottom 25%. Now you can take this thing off. You don't need this anymore. And now you're just looking at strong move up. Here's the wedge. It broke out of the top. Now, one of two things are going to happen. Either it's going to continue on up because all of our moving averages on all three time frames are in alignment. We have, now right now it's still not really in alignment because you don't have the orange one should be below the yellow one. So we don't have the total crossover. And that's one reason why you're probably looking at this thing holding. Now it probably will go and maybe bounce off of this area. And if you look from where the peak of this is to where the wedge is, do a measurement and see, is there enough room that if this trend breaks, okay, you have 12 pips. Can I get 7 pips in here if it bounces? And the answer to that is yes. So you scale down. So, okay, so there's enough room to this red area that if it bounces off this wedge, I can still get my 7 pips and maybe go higher up to where it starts chewing up all these sell orders in here. So we move down to a 5-minute chart. Now all my 5-minute moving averages are in the correct direction. We had a nice little break. We have this, this is at the top of the wedge, and we're looking at, I'm just going to take a different, it's the same 25% area. Let me slide this on over here because this is the top of where the A was. And I'm saying that if I get a close inside this area, which it barely closed, that I could probably take a long, but you're also going to be looking at make sure that it's, when it closes that low into this zone on a 5-minute chart, what about a 1-minute chart? How's it looking on a 1-minute chart? You scale it down. Well, that's a little bit deeper close. Now on the 1-minute chart from where this closes, let's say you did take that trade right here, right on this, right at this blue candle. Say, okay, you just, well, you say, okay, my criteria is if it closes in this zone right here, and we'll just make this where I had a blue, I usually had a blue before, but it's the same thing. This, we took the entry right there. How far do I, how big of a stop do I need if it comes back and reverses on me? And because you know you're already at the top 25% of that whole big move where the A was. And so, and now this is the major wedge. The orange one is the major wedge. We had those secondary wedges, which is what we were really looking at before. We had the nice move down. We had this secondary wedge down in here, and that's where we were able to get into this trade. Well, now we're at the top of this. So now the question is this thing going to hold, or is it going, because right now this point right here is a lower high. It broke the C, but in the scheme of things, it's still a lower high than where your A is. So if here's your high, here's your low, did this make a lower high? Yes. Did this make a lower high? Yes, it did. It's higher than this one, but here's your W. Here's your W. And now we had a rejection here. Now the question is this going to be the area where we can maybe find another smaller wedge, the secondary wedge that we talk about? Here's our nice strong move up. And this is where your eyes are starting to say, okay, well, here's a high. It's already in that the zone that we're looking, a lot of the sellers were. Here's a low. Here's a lower high. Here's a higher low. I'll make this a different color so we can distinguish between the bigger wedge and the smaller one. That's where we're talking about yesterday. We're talking about secondary wedges. This is yellow. And so right now we have a high, a low. Here is a, and you can actually even, I mean, you can leave that one right that, or you can take this B all the way back here and see, okay, can I get my third hit? So here's the first hit. So right now this is not valid. Well, actually, here's a low, here's a high. Let me expand this out a little bit. Here's a secondary hit. So this trend line right now is valid. You can take it all the way out here and just tweak those things up. And we have a high, a low, a lower high, a higher low. Here's our wedge. Bring this down. Here's our hit. This is valid. This is validated. Now, if we get a break, let me take this over here. I'll just put this right here where this low, high, hit, anchor. Well, here's the anchor. Here's the hit. Here's validation. Here's the anchor. Here's the hit. Here's validation. And now if it breaks and closes above, we had to close inside this area here. So now if we have to close, we can still be going long, especially as we look and see, is the euro still strong? Yeah, it is. It's strong by 3 over here on this 1 minute chart. We had the validation. Now our risk on this trade, if let's say we took this right as it closed in here, our risk right now is at the bottom of, well, where the D is basically, has been 14 pips. So that's a little bit more than maybe you may want to do, but that's still within tolerance. It's not like you're losing 100 pips, but you're also looking to see, is this thing going to break to the downside now? Because remember, this was all the way up in this strong supply zone where a lot of sellers were. And this was at the peak of where that total range was. And if you're looking at the distance between the top of where the A was and the bottom of where the B was, that's 66 pips. So you're at 66 pip range. You're risking basically, if you get the break of this secondary wedge, you would be looking at, I would be looking at a close between here and here, just like we did with the bigger wedge first. Enter to close. If we get, I'm looking to see where is the, let me see where the, I'm looking to see where the blue candles, if we get a close below in this area right now, and I'm using this blue candle right here, the bottom of this blue candle as my reference. If we get a close in this area, it broke the wedge. Now, questions we have the 62, this 1 minute 62, actually it would be coming down this way. I'm gonna use where the hit was. If we get a close into this range, I might be looking to say that I would be one to bail. I'd be wanting to bail out of that trade. Because keep in mind, you're already in the upper 25%. And remember, we say that it just goes from lower highs. This is still a lower high than where this was, which is over here where the A was. A is all the way over here. So from the bigger picture standpoint, we need to get a close above this before this whole area is chewed up, and then we're looking up for the next target.
Yeah, see, that looks like a fake out to me. You know what I mean? Everyone's gonna think it's gonna go higher, but I think at this point that we're going down. You see how it failed in the in your RSIs? It never came up to the top there.
Oh, this one right in here. Yeah.
Yeah. You see what I mean?
Yeah.
So because you have, so where I got out was it was in the extreme at the top, like above 88 or whatever, the blue one. Now it's made a lower, and now it's made a lower, and because there's no divergence between price and because there's no divergence between the RSI, I'm of the opinion that it's going to continue going down and could retest and break the 62. Because, and the reason I believe that is because it's I don't have the right technical term, but I think you can call it like a complex correction. And these are the more complicated wedges to trade. So there's two types of wedges, okay? There's the continuation, and then there's the reversal or correction. The ones that are corrections or reversals, they're actually pretty hard to trade because they will have major moves up and down and fake you out. Because of the movement of Euro USD in the last day or two has been really strong in one direction, this is why I am of the opinion that this is going to be the reversal of the trend on a much higher level, which means on the lower time frames, you're going to get a lot of up and downs.
See, one thing, as I look at this a little bit closer, I see, and I usually like to look at these big moves on the 1 minute chart. If you see a 1 minute chart with 1, 2, 3, 4 candles that haven't been that have no red candles at all, here's where there was some basing right in here. So basically, what I'd be looking at is that you can tuck it in right under this little wick of this big blue candle, and you see where it came down. This would be where I would be looking at. Well, let's see, if I take it all the way up here, there's like no zone at all from where the D is. But if I were to get a close below inside this area, which you could, if you look real closely on this, and this is why this is precision types of trading, is that we have the bottom of this blue candle, bottom of this blue candle, but this is all pretty much on the same. This is basically the same price point. It could not close below this. Here's where my D is. So I'm bringing my line down here to where the D is, knowing that nothing that's closed below this part until this area right here. And that's why I say if I get a close into this region, and I'm going to bring it down just a little bit closer because this is where the close of this blue candle. This is of where the B is. And to where the D is, there are no blue candles. This is the bottom of the candle that closed. If it gets a close in here, which it did not, it's still going higher. Now the question is that we have our high, our lower high. Is it going to break? We don't have a validation of this trend from the A to where the C is. We don't have validation yet. This just broke it, but it hasn't broken the C. So right now, the validation could still be, we're still looking to see where, if we have, depending on where this one closes, this could be a valid.
Close a bit higher.
It could close a bit higher, but we'll see.
Yeah.
I mean, we're going to see if it's going to close so high, it's going to invalidate this little wick right here. Right now, it's let's just wait and see how this works. Right now, the C is still here. Now this one just closed. You can see where this closed right at the same level as this. So that somewhat validates this point here. And if I come over here and I measure to the trend line, let's see what the difference, how high is, what is that from here to the trend line? It's 1.3 pips. That's a valid hit. So right now, in my mind, this trend line is now valid. Now we have to, this isn't going to be confirmed until we get this thing pulling back a little bit, until this candle here gets closed. Now we did get the close of this trend, but again, we don't have the validation of this yet. I like to see it come up, come down, then retest it. And here it came up, it retested it, but we've had to break, so we really don't have valid. Right now, we're still waiting to validate the lower high from the A, and right now this is not valid yet. We have the validation here. We have an anchor, a hit, a hit, a hit, a hit. I can actually move this thing over, and I still have validation of my BD line. I don't have the validation of the AC line yet. And I won't get that until it either breaks the top, or it's, as long as it makes a lower high than where the A is, wherever that may be, we have to wait for it to close and break down to be able to get the validation of it. Right now, this is just a top, and it's actually breaking. If we were to take a trend line from this area over to here, you can see this has been broken, but right now we're still waiting for validation.
Yeah, we're nowhere near taking a trade on this. This is, you're looking to get your butt handed to you. You see how big those wicks are?
Right over here, yeah, these are all,
Yeah.
yeah. And, but if you come over and look and see where these wicks are, if you come over, and I've been using this a lot too, where you have a wick. Let me just make this a little smaller here. You have a wick, and you come over, and you have these are all this. Okay, when you take this wick, and you come over, still same. Here's another wick. You have to come on up. Now you hit a body. Right there is this would be the next target, right in here. And you see where it's coming up in here, and it came up, tested, came up, tested, came up, tested. Now, if it can break that, and it can break this wick, once it breaks this wick over here, now you have another body till you get to these wicks. So right here, so here's a new zone right here to be looking at. Let me get my clone. And you see and so I'm going to be projecting this C is going to be somewhere right around in here, but it may come up and tag this area because once this breaks, this is a bigger candle. This is a bigger candle. Once this candle's wicks get broken, this zone here, we have all these wicks, then the next stop is really going to be right up in here. Now this is all fresh right in there. So I'm projecting that the C is going to be able to be validated, or at least the first hit of this trend line coming down of this new wedge is going to be somewhere either in or below that. If this gets broken, then, and we get a new close, it's going to go up even higher still. But right now we are in this 25% range of where the original wedge was. We're up in the upper 25% of the range. And this range right now is from here to here, that's 18 pips. If we look at some of our fib lines inside here, here's the line right here. This is probably going to be we have a, let's see, this is a 5 minute. Hopefully this is 5 minute, I think. Ooh, that's a 15. Let's put this on a 5 minute. Here would be a target. If it breaks here, here's going to be the target, this blue fib line right here. And you can see where it's sort of struggling. Let's see, where's my fib line here? Between here and here should be 21 pips, I believe. On a 5 minute, yeah, this would be 21 pips. So right now, this is the upper 25, and we put this on a 2 minute chart, a 2 minute fib line. And you'll be getting these tools.
Yeah, sorry, Beach Panda. You had mentioned that you were wondering where to get all these different indicators that we're using. They're coming, I guess, is the right way.
Because we've been saying that but they are coming.
Last 2 months.
Beach Panda, why don't you email me your, anybody that's in the room that wants to try and get these indicators, send me an email to hawkeye@auvoriaprime.com, and we'll see if we, and with your email address, and we will get back with you on that. I'm trying to get a hold of the developers as we speak, and what we're doing is we're offering a 30-day free trial. We have to get a hold of the developers to get you access and the availability to get them. So what we need to have you do is just send us an email, and then we'll get with Anthony and John, and get you out, try and get that set up. And we'll be doing that for probably about the next 30 days until Auvoria Prime can get everything together that they need to make it more of a permanent situation for us. See where our A is. This is now this is our secondary wedge. You see how this thing's breaking right through? This thing's got some and see right here is where it stalled, right at the top of this. Now we did get a close above. So right now, this AC is a flat line and it's still validated. It's not totally validated because we still haven't had the second hit or the third hit. The third hit of the trend line gives you validation. Then when it gets broken, but right now we're still up in this upper 25% zone. Now we did get here's our red fib line right in, let's see if I can scoot this up here. This red line right here, we did have a pass. Now it's retesting this line right here. And if it can retest and close, then it's probably going to be looking at the blue line, which is this one up here. Right now, all of our moving averages are still trending very nicely. And right now you're seeing how it's respecting, even on the 1 minute chart, it's respecting this 1 minute moving average. The 13 moving average on the 1 minute chart. This would be the next target right here. If you're still in this trade for some reason, this would be another target area to be looking at once it breaks and closes above here. And it may just wick right on up here, tag it, and come right back. And that might give us our validation of or where the new trend is starting. Any more alerts? No more alerts. Nothing since. Now, keep in mind today, just so we know, that at 10 o'clock, and that's probably one reason why we're getting some of these moves as we are, the British and the US have some red folder news coming out. Manufacturing and the Bank of England, Bailey speaks. And so what time is it right now? Right now the time is 9:30. We're going to have the US market's going to be opening up in just a few minutes. If anybody wants to take a quick break, we can take a quick break and be back here for the opening. But why don't we do that? Let's take a break, and in about another 5 or 7 minutes, 9:30 will come. We may get some alerts at 9:30.
Sounds good.
Let me get my screen up here, my break screen. Okay, we're back. Recording started again. Let me go back to the charts and we'll see where things are going.
Looks like we continued recording while we were on break.
I thought I stopped the recording or I paused the recording.
Oh, I don't know. It was still recording when we...
It was, huh?
Yeah.
I thought when I hit that pause recording, it stops, but maybe I'm...
Maybe it's just my screen. I don't know.
No, I mean, no, well, let's see. Right now,
We got a breakout to the upside, so that's good.
Yeah. Yeah, still, I mean, it's still, again, back in this, from this Fibonacci zone that we were talking about, where we had our A here, but actually here's the, so we're still in that upper 25%. It's still basically still playing around in this area. In this area, we're looking at a zone of 23 pips. So there's still some profit being taken in there, but we don't know how much higher it's going to go before it breaks. And if it breaks, then we're looking at this area up in here. So this would be the next zone to be looking at, where this wick is, this is where the other buyers came in, where sellers came in. Top of this candle there and over to this one here. This is a 15-minute chart. So this is my next area that I'd be looking at. If it breaks here, this is sort of like a level and a level. This is where that trap oftentimes comes in, where it breaks an area, it comes right up, it traps everybody, and you got a whole bunch of sellers right up in here waiting for it. Price comes up, people come in, they buy it. Who are they buying it from? They're buying it from the big guys. There might be 10,000 lots in here trying to get filled. Comes up, fills a few, comes back, comes up, fills a few more. And then eventually there's no more buyers saying, I'm not playing with this game anymore. No more buyers. And then the price starts to fall down. So I'm going to take this over here and we're going to make this one red again. So this makes a supply zone on top of a supply zone. This is all part of the technicals that we're trying to bring to everybody's attention. Again, we haven't really done anything other than drew a big wedge, and now we're seeing how much further, once it breaks, where's our target? This thing broke right into this area right here, this upper 25% of the move from the A to the B, which is where we drew our pivot high, pivot low, and right now it is in the upper 70s. Well, I'm not sure what the percentage of this one is. Probably the 81% of this whole move. But I said we just drew our range from where the A is, top of the A, to the bottom of the B. There's the top of the A. Here's the bottom of the B. Here's the upper 25%. I'll tweak this up because I used a little bit higher high. I used the absolute pivot high up here where the A was. And so right now we're in this little zone. Right now the candle that closed, here's our red candle. This is where we had consolidation. This is where the break was. This is where the buyers were, right up in this area. If it can come up here, it's probably going to tag. This would be the area where I would be looking at saying, if I get a close above this area, I don't want to go long. I don't think we're going to get the close above there. If we do go long, it's going to be only up to this area. And right now, here's our high. The C, I mean, we can readjust this wedge right now. We can adjust this wedge since it's already broken it, but the question is, do we still have a lower high? And the answer to that is yes. From the A to where this is, it's still a lower high. So we can actually go and adjust this wedge, because now this wedge is starting to show the full expansion of that range. Bottom part's still valid. We're still looking for that validation. We want to see this thing come up, hit, pull back down, hit again to validate this. Right now, it's not. Again, it's still not valid. It's still a lower high, but still not valid. It's still uptrending. Nice. I want to see this thing pull back, and then come back and retest it. And that's where the gravy will be. If you can take that on the retest, can't hold it, then you're looking at the bottom of this wedge for your range. And again, it comes back down into the 38%. This would be like a 61% retracement of this move from the D to the C. 61% would be right into this area right here. And then that would also be another validation of this trend. And you see, Here's your W. If you can pretty well see the W right here. First leg of the W, middle part, comes back, retests the bottom. And here's the retest of this area right here. Here's your W. Let's see if I can draw that. Learn how to draw those with these annotated. Well, let's see. Oh, actually, here's another thing you can do. Here's our W. Let's see. Oh, get my tool here. And this, my friends, is a harmonic wave.
Yeah, it's a really nice W.
It's a beautiful W.
Yeah.
This would be a classic harmonic
pattern,
wave.
right?
Harmonic pattern. Here's your A. Here's your X, A, B, C. Here's your D. This is the top of it. And then
So
we'd be looking, and that could be the
reversal.
That could be where the reversal comes in.
The D is generally where the reversal is. So in a while back, people can I've traded just the C to the D move on a higher time frame because the likelihood that it goes from C to D with a specific scanner was really high, like really, really, really high. But these harmonic patterns, I don't think there's an appetite right now to get too deep into that, but they're basically like breakout wedges. So, but there's a whole bunch of stuff with harmonic patterns. They're really powerful, high probability, but pretty in depth, and that would be I believe it would be taking away from kind of trading wedges right now.
Yeah, I think so. But one thing I want to point out with this is that inside the wedge, there's a W, or inside the wedge, there may end up being an M. So the last leg of the W is the first leg of the M. So from this, if this thing comes up, now we're looking at an M pattern. I'm just using that because it's a nice tool to use to draw an M and W. So here's your first leg of the M. Here's the M. You see the M. I'll just put this right here. You see the M. So the one leg of the W slanting up will produce another M pattern in between. And this is as it starts getting tighter and tighter and tighter.
This your best trades are going to be the M's and the W's.
Yeah.
In the Forex, look for them. Try to identify them.
And try and find them inside the wedge.
Oh, of course.
I'll take this off here. As
we're throwing
a few new things, a few new concepts, but the main concept is still we're drawing the wedges, we're finding the pivot points, we're finding the validation of the trend line, which is basically your top and bottom lines of your wedge, and you're looking for you to enter your trades. And try and have as tight of a stop as you can to get as much of a profit as you can. And we're looking at, all we're doing is trying to get 7 pips. Try and find that zone where we can take the trade, either a breakout, which was on this area right here going back up, but you even see it as if we had the wedge from where the A was to where the alert was, and we had the breakout, do we have 7 pips from where this thing closed above the wedge to where our next target was? And I think the answer to that is probably yes. Here's a breakout, 14 pips. So if you can get these breakouts like that, because this was where the original wedge was. Now I moved this up because it broke it and we had a new target. But here's where the target is. This is where the target area is of that whole big zone. That's one reason why I like to have this pivot, the big pivot high, big pivot low. Find out where the zone is. Find out where the price is trading, and then try and find the extremes to get in or to get out, or to see where it breaks through to the next target. That still have given you your 7 pips. Now, once it breaks, comes back in. Now, this is getting tighter and tighter. I wouldn't take it the second time. From where the alert was, you had your breakout, you come back in. If it comes back into the wedge, I would be looking at maybe if it came back down here, if I had validation that it was going to go lower, but still has to clear this whole area out. It has to clear this box out here. And then maybe if we got to close below this B.
Yeah, but you're looking at maybe a potential breakout trade, so that's not really what we aim for, right?
Right.
Because we just need a small piece of it. We don't need the big run. The big run is going to require a bigger stop loss, which means you're going to make less potential dollars per pip gained. And the tighter your stop loss, the more value you can load your trade with. I mean, in the pips. So basically, if you're using a 20 pip stop loss and I'm using a 5 pip stop loss, I'm making 4 times the profit that you're making if the move goes 10 pips. So I'll make potentially whatever. Say you make $10, I'll make 40. So that's where the power of getting in with a tight entry, that D move is your trade. You know, because your stop is on the other side of there. But you can add so much to this, guys. If you get comfortable and you like taking the longer runs, I mean, if you put the 15-minute whole moving average on there, it looks like it still didn't flip from the time from the entry of the D. It's still green. So it could have got the vast majority of that move, and you could have exited whenever you felt comfortable.
You can see, like right now on your 1 minute chart, you're starting to get some consolidation of your moving averages. They're all starting to bunch up together. So you have a very tight range here from 1842 to 35. This right now, this range right in here where the moving average, we have the crossover of the 5 and the 13. From that range right there, you're only looking at 7 pips. This is a 7 pip range right in here.
Kind of coiling, right? Like, you know, the like a DNA coil, they're going up and down and intersecting.
They're just trying to decide if it's going to come back up and retest this area up here. Or the more, basically the sellers are saying, oh, the buyers are saying, I'm not coming up here anymore. Well, there's going to be a few that are going to come up and say, well, okay, we'll see if we chewed up all the sellers. But now the sellers are up here saying, I'm going to try and get as high as I can. Or they may say, you know what? The sellers might say, okay, I didn't get filled because I had my sell up order up here. It's coming out of the zone. I think I'm going to maybe move it down here and say, okay, I think I'll sell those positions I didn't get sold before. I'm just going to, when the buyers come up, I'll just fill their order for them. Again, it's going to start looking at it, developing another trend here. So right now we have no secondary hit. Right there, that would be a trend line. If it comes back and retests that validates that. My guess it's going to probably come up maybe a little bit back into here again, probably maybe up to about that area. So right now what we've done today, basically we had one trade alert, and we're showing you the full run of the entry, the initial entry, and then how to capitalize on the longer runs, trying to find out where the reversals are, where the, and basically this one had 2 reversals. It had the reversal, it was more of a continuation I think. Let's see. My higher time frame up here. It's the wrong one. We had here was a reversal, and we're actually looking at two reversal patterns from move down, little flag, reversed, came down. Now it's continuation up to here to where it's going to look, but it's probably going to reverse again. But right now it's trading in between the A and the B. And we're just trying to find those moves in between.
So Michael had a comment there. Is it a classic butterfly? Well, I don't know what pattern it is. It could be butterfly, bat. There's a couple of them. Shark.
Yeah, it almost
Sharks are dangerous in more ways than one because there's actually two entries on them, but that's just outside.
I'll tell you what, I may be able to answer that question for you.
Yes, you can. You do have the scanner.
I do have the scanner.
So we could have an idea from the 15-minute on Euro USD and
Euro
see
USD.
what.
We'll see how close I was when I drew that. If I can find the Euro USD.
I don't think you're off by too much.
Euro US. Where is it? Let's see.
You don't have to draw many of these to figure them out. You know.
Oh, here it is. There it is. Euro USD.
Let's see.
Go.
What do we got?
And we're on a 15-minute chart.
Ooh. Wow. All right. So the D is way the heck up there on 3 patterns.
Yeah.
That's all right. That gives me.
Could be
wow.
way. Look,
Wow.
That's where this one's drawing. This is the. Here's the bat. You were asking about the bat pattern.
No, butterfly.
Butterfly. Let me see if I can find a butterfly on here.
No, there's a.
I may be able to. I may be able to do it on a different time frame. Let's try 30-minute. Not there. Let's try 1 hour.
No.
Let's try 5-minute.
Shark. But I don't like it.
Yeah, I don't really.
I don't like that because the other ones are.
Let's see, 1 minute.
Oh yeah, Mike, you don't want to be drawing these manually because you see the ratios 1.534. You see 1.423, 2.709, 0.729. There's a specific relationship between these that if it does not meet that relationship between the X, the A, and the B, or the B, the C, and the D, then it's not valid. And so this is projecting the pattern onto there. This is a scanner that we don't really talk about a whole lot, and we don't want to. I don't think we really want to get too deep into that.
No.
It's just to show you that there is other stuff going on the charts that can play into this.
Yeah, but we're going to pretty much try to stick with the wedges. I said all we're trying to do today is give a little bit of exposure while we're waiting for new wedges to come to see how you can possibly play this to where we're looking at supply zones, we're looking at demand zones. And when we say supply, there's a lot of sell orders up here. There's buy orders down here. Once all these buy orders get filled, the price is going down lower. And it's going to where we find the next supply zone. Until then, it's going to be, or once all these sell orders are filled, here's where the next set of sell orders are. And so when these are all expired, there's nobody to set the buyers have nobody to buy from because they're all up here. So the price goes up. Now that makes the guy that bought right here pretty happy when it goes up here. He can say, "Oh, I can take my profit." But he's not going to be happy if he says, "Oh, I'm going to buy right here, and here's all the sellers, and there's a whole ton of sell orders, and now it comes down." And so this guy on this blue candle right here, he buys up here into this zone where all the sellers are. He puts a stop down here Well, guess what happens? The sellers, now they're selling. They want to buy down here. Well, if this guy has his stop up, he buys up here, he puts the stop down below. We've all been there. He puts the stop. Okay, I'm gonna keep myself out of it. Guess what happens? He comes down. I just got stopped out by a tick. Well, guess what? Here's where all the buyers are. The guys that sold up here, they're trying to buy down here again. And he bought at the high, and now he's selling at the low. You want to sell up here, you want to be buying down here. That's why it's key to know where these areas are. You want the breakouts but you also want to know where your target potential is. Because if you get a breakout and you only have 3 pips, if this whole zone is just sitting right above, well, let me get this one here. If it's just sitting right here at the bottom, and you've got a bunch of sell orders right in here, and you can't break through that, you just got whipsawed. This is where the trap is, right in here. And this is the top 25% of this A to B move. This is the bottom 25%. And we're just trying to get your little piece of the pie somewhere in the middle. When you want to try and get up here with as tight of a stop as you can with the price action. And that's why we use a 1 minute, because we can see where that price action is. You put this on a 1 minute chart. Same chart, different picture. And you say, okay, we have a trend developing. A high, a lower high. Now, if it comes up and retests here, that's valid. That validates it. And guess what we have here? We have a potential wedge. Here's our high. And it's in a lower time frame, 1 minute time frame. Here's a low. Here's one hit. Here's our second hit. Neither one of these are valid yet. But when this thing comes up and hits up here, and it holds, and it hits down here, and breaks, now we have a new trend going down. And it's going to go down until we get to probably to this area right here where it broke the first time. We can move this over here, or we can move it over here. It's still, here's a hit. Came down, here's a hit. Move up. Now we're going to see if this thing's going to give us a reason to maybe think about taking the trade. Now, right now, we want to see, is this going to hold? If it comes up here, the RSI comes up, hooks. Remember, these things go from here to here, back to here, back up to here, back down to here. If this thing's hooking up here, you don't want to be taking along, because guess what? It may come back down, and that's where your pullback is. Now, do you see a potential W here? And I'm going to use this tool just to draw the W. See a potential W here? That look like a W? More than likely, it may come up a little bit higher. There's your W. And it's almost 10 o'clock and we need to be out of here. So I hope you got something out of this session today. It's our pleasure being here. And
yeah, we really
someone's going to be in the room here.
Yeah, we really enjoy you guys, and it's an absolute pleasure. Like Al says, just being here, trading with you guys. It's such a benefit for myself and Al. It's just so much fun connecting with people, because trading can be a very lonely game. You know, it can be very lonely at times. And then working with a community of people that just want to see you win, I think gives a lot of value. So we thank you so much, and we'll catch you guys tomorrow.
Okay, and so we gotta be out of here. So thanks everybody, and again tomorrow at 8 o'clock we'll be here. Have a good day.
Yeah, bye guys.